Welcome to the Ladies Discourse. This is your girl Taz,
And your girl Sha.
and we're your hosts on TLD. Today's topic is on good credit versus bad credit. In America, the average credit score is a 714. Gen Z, between the ages of 18 and 25, score is a 679. And the silent Gen ages 77 plus have the highest score of 760. For those who don't know, President Biden has put in place a new rule for good credit holders having scores over 680. Those individuals will pay $40 more each month on their $400,000 mortgage loan and upwards depending on the loan size. Those who make a payment of 20% on their homes will pay the highest fees, and those payments will be used to subsidize the higher risk borrowers through lowering their fees. So let's jump into it. Oh, that's interesting, huh, Sha?
It's very interesting, very
Mm.
unique too, very unprecedented.
Hold on now. Let me get into this. I still okay. Well, let me ask you this. So, Sha, what are your thoughts on this new ruling coming May
I
1st?
I have mixed feelings about the new ruling, the new mortgage ruling that will take effect on May 1st. I think it could be beneficial for the borrowers that may have hit hard times in the past, some years ago, which resulted in them having a low credit score. But now that borrower may be back on track, they may have more stable income, they may have saved some money, they may have paid down their debt. And the
Mm-hmm.
one thing that may be preventing them from buying now is their lower credit score. I think this can be beneficial for that borrower. This may be the break that was distinctly designed just for them.
Okay.
But on the other hand, for the borrower that has a lower credit score and say their employment is not super great, it's enough to allow them to qualify for a loan, but it's still their earnings are still not that great and they don't have much saved in the bank and they still have some, additional debt on their record to still pay. I think for that borrower it may not be as beneficial for them.
Okay.
So
So
I
overall,
have
you
mixed
don't think it's
emotions.
okay? Because that's what I was going to ask you. So overall, this good versus it's not a good situation.
Yes, because, even for the person that has the lower credit score, we know there's additional responsibilities involved in home ownership. If
Right.
something breaks down, the homeowner has to pay for it. So if this person has a low credit score, doesn't have many resources to, if something breaks down, or just say something happens to their employment where they may be out of a job for a little while and they don't have the savings to pay their mortgage, it just may not be that beneficial for them. And I'm just hoping that this doesn't give us a repeat of the subprime mortgage crisis that took place in 2007 through 2010. And we know back then there were a number of people were in loans that they simply could not afford those loans. There were
Mm-hmm.
loans with no money down, loans that didn't require documentation, and they had adjustable loans. And once the loans adjusted, the individual could not afford to pay the higher payment. And this left the homeowner possibly having to foreclose on the house.
Right, upside down. But you know what? With a situation like that, can you really blame the buyer? To me that was a setup. How do you just not ask for certain credentials? Like I said, to me, credit is one thing, but you like you said earlier, you gotta have at least some kind of savings or a pretty decent job or, just something that can add to the qualification versus nothing. So to me, that was
Mhm.
almost like something they put in place maybe for that incident to happen. Because I mean, why would they do such a thing at that time? It had to be for a reason.
Well, if
Because
you
anywhere,
think about it too, it's a win-win for the bank. They
Absolutely.
are able to start this person on a loan. We know they pretty much make their money at the beginning of the loan, and the bulk of their money they make at the beginning of the loan. And then, say the person does foreclose, the loan is insured. If it's a FHA loan, they have the FHA insurance. So they're reimbursed if the borrower forecloses on a loan. And they also get the person's house to
Right.
sell. So
Now,
it's a win win for them.
it's always, but I know I had ran into this something that I was going to do. I had did a little PI class just to be able to do this thing with and I don't know, the only thing I don't know, because I don't want to give false information. I don't know whether it works on the mortgage side of it, but I know it definitely falls on the tax side of it. But
What type of class did you do?
I did a private investigation class because I want to do this particular program that helps people locate their monies and stuff.
Hmm.
And I can't remember whether it helped people on the mortgage side of it or it was just more so on the, you losing your houses to taxes. But what I learned is what a lot of people don't know, and I was telling somebody recently, and that person was like, "Yeah, probably 98% of people in the world don't know this, but when your house is lost to foreclosure through tax liens, when they sell your home, so let's just say your home was worth 100,000 and you lost your home to $10,000 in taxes. Once your home is sold off to that and the bank, gets that money or then some, the remaining balance is supposed to come back to that homeowner, which a lot of people don't know.
Yes, and I
So,
think there was something recently in the news about that, about a couple that went through just exactly what you're referring to. They bought their house cash a number of years ago, just say for I think it was $67,000. Got behind on their taxes. The house was taken from them. They sold the house for a large amount.
mhm,
I think it was about 300 and something thousand,
right.
and
No,
their
yeah, that
county
money goes
does
back.
not want to give them any of those proceeds.
Right. Well, apparently they knew about it and they knew about that, but a lot of people don't know about that. So yeah, so all that because the state is only able to take, or the bank should I say, is only able to take back what is owed. So when it comes to taxes, if
Mm,
they, like I was just made the comment earlier, if they only owe 10,000, that's all the bank can recoup from that. So if it made 90,000 from that sale, that 90,000 go back to that original homeowner.
mhm.
So yeah, it's
Wow.
interesting. A lot of people don't know that, but yeah, that works, and it's so much money that's sitting out there in regards to that. And if too much time passed, then the state takes it, and there's nothing you can do at
Mhm.
that time. But yeah, it's trust me, a lot of people don't know about that little gem right there. That's a big gem though, because it's some big money sitting out there. But
Mm. That's something.
hmm so hopefully they get it, and depending on what state they're in, they should be able to get that back. So
Mhm.
yeah.
Yeah, and also just talking about the ruling again, I think it's kind of unfair to make the people with good credit pay more to help subsidize the other individuals. It's like
Right.
they're being punished for having good credit.
You know what? That's a good point, but I don't want people out there that have good credit or feel they have good credit to feel like that. What those people need to do is, push back. You get what I'm saying? Because it's not about that, in my opinion, per se. You get what I'm saying? It's just another way to me to cause distraction and to cause frustration between different groups. You get what I'm saying? And that's how I look at that because it's other ways out here that President Biden could have, made that rule. It's he could have just said, "Hey, credit is not needed," but he turned
Mhm.
around and decided to put that on the backs of someone else. Which to me, that's what America is good for, and I think they have to stop that because it causes so much division. You get what I'm saying? It just don't even make
Yes.
sense to me to even say, "Okay, well, hey, you got higher credit," you know. we're gonna make you pay more just so we can kind of balance out the people who are low income people or people who got low credit scores. Like I said, that's an accident waiting to happen,
Hmm.
and unfortunately that accident is coming up here pretty soon. So,
Yes, next week.
um, but no, that to me, and that could even be a lawsuit. That's one of those things. That's discrimination to me. So, guys, look into it. Maybe that's something someone could sue about. I'm just saying.
Hmm.
That maybe. I mean, really, it's like race. I mean, hey, you're penalizing me because I have a higher score than someone else, and you're making me pay more because of this. When that doesn't have to be the case. It's like I said, he could have made a better rule than that.
I
And
agree.
yeah, so
Yeah. Yeah, the average credit score in the United States is 698. The average credit score for white Americans is 727. Hispanics is 667, and for Black Americans is 627. What do you think causes the average score to be lower for Black Americans?
well, in my opinion, I think our score is lower because of who we are as a people. Society has done plenty of things throughout the years, to make it harder for us as a people to live, to work, and to provide for our families. So having a low credit score sounds about right when it comes to us. It's unfortunate. However, I think we just have to surround ourselves with the right people and the right resources to help us understand and know how to maneuver this thing called credit. The old saying goes, where there's a will, there's a way. So that's how I feel about that. It's not surprising. I just think it's a lot of things out there that hold us down. And so to
Mhm.
hear us, below Hispanics, it just kind of make me think of all the other things that they do to us as a people. So
Mhm.
I feel that's about right. Unfortunately.
Yeah, I agree that there are other things that cause African Americans' credit score to be lower. I think if you look at the statistics, we usually have a higher rate of underemployment, unemployment, and of course, disparity of wages.
Right.
So the all of these things contribute to Black Americans
Right.
having a lower credit score.
And then you know what? Sometimes, and again, I'm not just that'd be ignorant of me to say that that doesn't play a part, but I would even like to see if that even really plays a part. You get what I'm saying? Just because you have a low income, that doesn't mean that your credit score has to be low. You know what I'm saying? It's really about how you managing your bills and how you making your payments and paying things back that you've used credit for. So I would like to know that. You know what I mean? And I'm not, again, not saying that that does not play a part, but I would like to know how much of a part that it truly plays.
That'd be
So
interesting. I guess I'm thinking on in the sense that you have to pay for your essentials. And then if your income is not at a certain point to cover all your essentials, then that may make you run to the credit card to maybe put gas in your car or buy
right,
the groceries to hold you on over to the next paycheck
right,
and pay the light bill or whatever it may be if your income is not high enough to begin with.
right. No, no. Like I said, you're absolutely right. Um, but like I said, I would like to see that because sometimes people we use these things just because we know we figure, oh, it's because my income is low, or it's because these things. And not to say that you wouldn't be struggling to pay your bills, but sometimes some people may not be. You get what I'm saying? It's almost like when they say when you have more, it's like requires more. So I don't know. Like I said, I would definitely like to know how that would be. So let me ask you, Sha, do you think credit scores are given or earned? Kind of based off the little, you know, comment I made. I'm feeling a certain way about it when it comes to us as Black individuals. Do you think it's given or earned?
I could only mainly speak from my situation because I don't know other people's credit scores. So I know I don't even know what my credit score is at this time. But in the past, when I would get my credit report, see my credit score, I wasn't surprised. What was on there was the debts that I had, how I paid them. All of the information looked pretty accurate, and the credit score that reflected what was on my credit report seemed accurate. So in my case, I could say it looked like it was what I put into it, or quote, earned, unquote, if you want to say earned.
Right.
Because, the higher the credit score could just mean the more credit you have had over the years and paid it on time.
Right.
So, yeah, I know you probably have a different stance on that.
Yeah, I was thinking about that. I just always felt like, of course I've had debt. Sometimes I feel like debt up to my ears, but I don't have a whole lot, but I felt like I went a long time without having credit. I probably was almost pushing, I probably was in my late 20s when I was first. I don't even think I ever got any offers, but I think at that time I was starting to apply. And I remember like in high school when I had friends that were getting credit cards in, 11th, 12th grade, store cards and, different things of that nature.
Mhm.
And I used to wonder, like, why? I think I had a credit card at the time. I probably was in 11th grade or whatever. I think I was 10th or 11th grade. I think I was working for Macy's, but that didn't so much count because it was almost like they gave them to you just because you was an employee.
Mhm.
But past that, that was the only one I ever had. And I just always felt for me personally, and I know other people's credits, whether it was, family members or, children or whatever, it's like I just always looked at it as like a joke. Me personally, I feel like I've never reached a certain level where I felt like, oh yeah, I'm it. You know, I always felt like I was pigeonholed, or it's just like I just couldn't get over a certain level. Even whether I had a whole lot on it, or a whole little bit of nothing. Even if I had like maybe 4 or 5 things on there, it's just like my score was never looking like nothing. In my opinion. And
Yeah.
it's been times where I paid my stuff off. It's been times, even if it went to as a charge off, I paid it off, or just what. And to me, the score has never reached a satisfaction, in my opinion, or what they considered, you know, um, pretty much the numbers that you listed. I've never reached 100. I'm gonna just be honest. I've never reached 100. You know. So
You
I
mean
mean,
like in the 800s?
no, I said oh, excuse me, 700s, 700s. I've never
Oh,
even
okay.
reached a 700 ever.
Mhm.
You start out where when you don't have any credit, it's a situation where they don't give it to you. They say you don't have enough, and when you're trying to, he's like, okay, well, I'm trying to build this, so somebody got to give me something. I went through that for many years,
Mm.
and then, like I said, eventually when I started, but I don't care if I have a couple of things on there. I've never. So I don't know what I'm doing wrong, and like I said, even right now, I don't have much on there. Besides student loans, I don't really include that because it's not like it's going against me on there. So I don't know. Just my opinion.
Mhm.
So
Yeah, there are different ways that it's measured. We may wanna do a show on that. What
mhm,
things, like you said, even when you had paid things off, it didn't help the, score to
mhm.
rise. So we
Well,
we
well, they
could.
say it do, but you know what? Well, let me tell you how weird it is. I done seen times where I can owe stuff on there and I ain't doing nothing on it, ain't opening up nothing, paying nothing off, and the score rise. So that's why I say to me is a joke,
Mm.
because you have it where people say at times, don't pay that stuff off. Let it, if you got it, pay it off. If you don't, let it fall off for 7 years. So I done seen it on both sides of it. Like I said, I've seen stuff and could look at it and say, hey, well, I got this on here, but oh, your score went up. Oh, your score went up. I'm like, oh, really? Okay.
Hmm.
So it's
Yeah, that
funny
is
to me.
something.
Yeah, I mean, and I'm not gonna lie about that. And I can even say that as of current, it's stuff, and I'm looking at it like, because I ain't really ain't doing much with it now, and I just been like, oh, your score is going up, your score, and I'm like, yeah, it's going up barely. But it's just funny because I'm saying to myself, you see, so which one is it? What do you do? Do you not do anything with it? Do you not pay nothing? Do you pay stuff? I mean, so I don't know. It's different.
Yeah.
And I understand, it's, I know it's ways. I know people piggyback. They, they do different things, but whatever. I think it's all a joke, really. At the end of the day, sorry to sound like a
Ideally, it would
Debbie
be
Downer.
good if we didn't even need credit.
Right.
And
Well,
some people do get to that point where they don't need it.
listen, I was listening to a guy on YouTube, and he, he makes these different videos, and I guess he's in California, and he'd be pretty dressed pretty decent, and he'll just stop random people on the streets, and he'll just ask them what do they do for a living and what are their credit scores and so on and so forth. And it was interesting. A lot of times when he stops the individuals and he asks them, for the ones that are I consider wealthy, because he's ran into some wealthy people based off the income they have provided him, and they be like, credit what? Credit who?
That's what
Credit
I'm
where?
talking about.
So not to say that credit's not being used in their world, but they're talking like, I don't even think about credit because my money trumps. You get what I'm saying?
Hmm.
So yeah, like I say again, credit was put in place to cause division, and it's no different with this what Joe Biden is doing right now. So
Yeah, I
you
just
know,
don't like that it's used to, like when people apply for insurance, they look at their credit score to determine,
well,
their
listen,
rates. I think
right.
that's not fair.
But listen, all of this is a game. And like I said again, when people really start reading a lot of these rules and regulations, a lot of this stuff, you'll learn how so much of these things are against the law. You see what I'm saying? But because we don't know a lot of the rules and regulations and stuff, we allow them to do things they're not supposed to.
Hmm.
I have a credit union, I opened up one not too long ago. And when I looked, he wanted to run my credit, and I was really angry about it. And I'm like, what are you running my credit for? Oh, we just want to, I get, they want to make sure that you don't owe another bank for us and checks and stuff like that. So I understood, and that's called like a check. It's like a check system that goes through. But anyway, so he ran it, and I was kind of irritated by that because I'm like, to open up a banking account, like really?
Yes. When I
But
moved where I live now, to open up a savings account, they wanted to run my credit. I'm like, for a savings account? That
right.
was
So it's something,
strange.
listen, it's something to that. That's why I'm telling you, when it comes to this type of stuff, it's a game. And it really irritated me. But what irritated me more, and I never did really get with them about it, but since I'm talking about it, I may go ahead and do that. I think he pulled my mortgage credit. And I was like, excuse me?
Pulled your
So
what?
it's I think it's a when you're trying to get um a mortgage loan, it's a certain type of score that has, and it looked like
Oh.
he ran that, and I was like, well, wait a minute. So you
Hmm.
got to really pay attention to these companies and why they're running your credit. And like I said, I'm not saying that's it's not a part of their protocol or whatever. Maybe they to figure if you're gonna ever use them for loans and home loans and car loans, that's maybe they get it out the way. But that kind of made me a little angry because I'm like, because I got something in my email. I was like, oh, we see that you pulled your credit for the mortgage loans or something. It said, and I was like, excuse me, no, I haven't.
Hmm.
So yeah, so it's just those are the things you got to look at, because and wonder why they're doing what they're doing. So I don't know. So I know we're sounding a little trying to cheer up a little bit here. This credit situation. Let me ask you, do you feel like African Americans receive fair credit scoring?
I think African Americans receive the credit score that their bills and payment history reflect.
Right. Oh, well, we
And
did kind of say that a few minutes ago.
yeah, and
Yeah, sorry about that.
yeah, and I think, I'm basing that mainly on me.
Right, right, right. Yeah. Okay. So, well, and then I guess I want to ask you another question, but you kind of touched on that before too. I was just gonna like say that should this system even exist? And in my opinion, where do I need to sign so I could say no, it should not exist? Because like I said again, I think all of this stuff is a gimmick, it's a game, and it works for whoever, whenever. You know,
Mhm.
it's no different like when you just when we talk about the bank accounts and stuff like that. I want to do a segment on insurances, because I feel that's the kind of system that I don't like that's in place, like how I feel credit system is. You have all these different insurances out here for what
Mhm.
ifs. And I get it, the what ifs because it's important. However, you never, and I ain't gonna say you never, because I know some people have, gained, been compensated for for their happen, for things that have happened. But when you think about the millions and millions of people in the world who have insurances, life insurance, car insurances, just whatever, that you're paying into years and years and years and years and years,
Mhm.
and then you get nothing in return. And if you don't pay that premium or whatever, all the money you paid out is gone, and you have to start these processes over.
Or
You
if
know,
you have a claim and they drop you.
yeah, yeah. So I look at that as that is the most gangsterous, you understand, corrupted system that exists really, because
That's
it's like,
legal.
in my opinion, illegal. Because I'm saying to myself, it's for what ifs, and you guys are just collecting continuously. You know what I'm, it's almost like if someone just comes to you today, Shaw, and they just keep giving you money, and you're like,
Mhm.
for what? Just because.
Mhm.
That's how I look at
Mhm.
that. I mean, think about it. Your premiums lap. Why don't you just, the person is not dead, nothing is going on. Why don't you just give them the money back? Or car insurances. I mean, think about it. You're paying your premium. You don't have accidents for years and years and years. Why not recycle that money? You done made the interest off of it. Because a lot of this stuff is nothing but interest based. So you done made the interest off of it. So you done got that money and then some.
Yeah.
So yeah,
Yeah,
that's
that
that's the
could be a
topic.
whole
Oh
nother
yeah,
show.
right.
Mhm.
But I'm just saying it to show you that that's how I look at these systems that are in place.
Yeah.
It's set up for certain people, and it's put in places for certain reasons that we may never understand, but it is a joke to me. So
Mhm. Yeah. Okay. There are a number of things that could lead an individual to have a low credit score. And we kind of touched on some of those things. Do you think this is a good time to buy a house?
well, I think anytime is a good time to buy a house, as long as you as that person is set up to.
Mm-hmm.
Plus I think since there are so many different banks and programs now, or organizations like NACA and Bank of America, that are willing to help, families obtain homes by protecting them from, like you mentioned, the 2007 8 issues, when they had a lot of um, um,
This,
predatory lendings and
yeah.
things of that nature. It's to help families, like you mentioned earlier, what they want to put people who have lower credit scores into these homes. Well, what happens if they can't maintain based off of their income and not having the correct savings? But with some of these banks and companies now that are getting it, they're putting other, they implement other things to help these families. Okay, well, we know your money's is not that great. We know your savings is not that great. We know your credit is not that great. So what we want to see is, do you work? Do you try to save? Do you have a little they're doing things to kind of balance it out, or like I said, make them successful owners and to be able to keep their stuff for long term. And
Mm-hmm.
those are the type of things I appreciate.
Yeah.
So with that, why not? Because like I said, now they're not, some of these companies don't, they're not even thinking about credit. So I think with them implementing those type of programs and helping people to, basically not setting them up to fail like they did back in 2007, 2008.
Right.
Like you said, they were just giving it out, knowing that these
Mm-hmm.
people wouldn't be able to, but that was a setup. If nobody couldn't see that, that's what that was. So now, it's making more sense where people are really taking the time out to educate and make sure that these new homeowners are understanding that this is a real asset, and things come with it, and you gotta
Mm-hmm.
have things in place to be able to maintain it.
Okay.
And also I was thinking about too, um you know it's one of those things when you just saying about the timing. I think, again, everybody's circumstances is different.
Mm-hmm. That's true.
Some people may feel like the interest rate is too high. Some may feel like, okay, it's low. Some may feel like their money, their credit, and their paperwork is lined up right just right. So now is the time. So with the saying say, to each their own.
hmm And
So
somebody brought up a good point in regards to when it's a good time to buy a house. You don't, to me, you don't ever want to really overpay for the house.
right,
You want to get a fair market value price for the house, because you could say that the interest rates are higher than they were in the previous years. You could always refinance the house, but you can't change what you paid for the house.
right, right.
So,
Well,
yeah,
that's a
the
good
interest rates
point.
may be high if you could afford it. And say you find a house that's a good buy, you may want to
Right,
go ahead and get the house with the higher interest rate. And maybe another 2 years, the interest rates are lower and you could refinance.
right, right. Yeah, it's like I just think it's with anything, you know. Hey, if you're ready, if the timing is right, and things line up, you know,
hmm
it can't. You know, sometimes people just bank on certain things, and it's not really about those things. So
We did touch on a few things. I'm just not in agreement with the new mortgage ruling, but we're going to
me
see
either.
how this plays out, see what comes about in the next few months, in the next year or so in regards to this. Hopefully, there's not a crash like it was back in 2007 through 2010, and hopefully it will benefit some people. That's
Right,
that's my hope.
right. Well, I think before it gets to that point, it's going to cause some chaos. So you know, once we get to that and get over that, then we'll see. You know,
Mm.
because right now, you know, that's definitely going to cause division. And and I'm gonna say this before we go. Think about it. Who's to say that the people who have good credit now is going to want to buy? You know, just knowing that hey, they feel like they got to carry somebody else's off their back or be penalized. So, you know, they got to think about stuff you know that they're doing out here, and then think of it in a whole full circle because that could backfire.
And then, just saying that, like, say that segment of borrowers say, okay, I'm not going to borrow now because it's going to be more expensive for me to buy. And then you have the individuals that have a lower credit score, they're going to borrow now because it's less expensive for them to buy. Is
hmm
it, is it, who are they trying to help in the long
Right,
run? We're
right.
just
I
going
mean,
to see how it plays out to see.
well, look, like you said, you just made a good point because if the if the fees and the people who pay down to 20% are going to be the ones that's going to cover the cost of the lower income families, and if they stop doing that, then where are the fees going? You know, where are the fees going to come from? Should I say?
Mhm.
Yeah,
Mhm.
it's like I said,
Mm.
trust me. I always like to use the domino effect. You know how you put the little, you know how you like to make the little lines and dominoes, and
Mhm.
you hit one and they just. I always say, you know, when people are out here doing the things that they're doing and they're lining them dominoes up, thinking, oh yeah, I'm gonna do this and I'm gonna do that. It only takes one, and when them dominoes fall, where do it go? It goes back to the start point. And I always
Mhm.
look at that. I always think about stuff like that. I said people don't understand. They put these things in place for whatever reason, which is I guess to serve their own to serve them, not realizing that when them dominoes fall, it's coming back to the one who set it up.
Right. And like you said, say those people with the 680 and above credit score, if they don't get a loan, so okay, so how are the people with the lowest scores going to be subsidized according to
Right, but
this new
that's
ruling?
what I said. That's what I asked. So, like I said, we'll see. People have to think, but they only think of one way: my game.
Mhm.
So,
And I do want to point out that I was listening to Dave Ramsey, and they were talking about the new ruling, and they did say, the two hosts that particular day said this new ruling doesn't is not effective for people that are getting a 15-year mortgage.
okay.
So it's for people to get in a 30-year or more. I was looking
So,
for it on the internet to see that in writing. I couldn't find it in writing, but just something to possibly think about. If someone's getting a 15-year mortgage, this may not apply to them.
right. Well, that says a lot. So now that's something to look more into because now you got to say, now, so now are they trying to push everybody that way? I tell you, this
Which
can go on
to
and
a
on and
what,
on.
a 15-year mortgage?
Right. Right. Not to say that it has to be bad, because I think that's pretty good, but that's just what I'm saying. That's what I'm looking at. So if it's not going to affect those, so is that going to force people to figure, what, just to avoid this, let me do this?
Yeah, I don't. It'd be nice if people were steered towards the 15-year mortgages, but I think people are already having challenges with the 30-year mortgage.
Right.
It's a difference. It's not a huge difference in price, but it is a difference. And the way house prices have gone up so much over the last, I say 5 years, the prices have
Probably
risen a
more than
lot.
that.
And it's probably a challenge just for people to afford a 30-year mortgage. So I don't know. It's just a lot of twists and turns to this.
Right. Right. I
Well,
don't know. Well,
well, let us know in the comments what y'all think about this new mortgage ruling that's going to take place on May 1st. Do you think it's fair? Do you think it's fair for the individuals that have low credit? Do you think the credit system is fair from your experience? Anything else you want to touch on, Taz?
no, I think you covered it, Sha. Thank you guys for listening. Don't forget to like, comment, and subscribe. Until next time.
Thank you.